Hey, good morning.
Okay. It is 9:01. I'm going to give you guys the full hour. What I want to do first is just let everybody know that, if you've been in business for a long time, um, you've you've probably already got some relationships built with mortgage lenders, right? And there's a reason for that, but not all mortgage lenders are created equal and they can't all do the same things. And a lot of times our clients need something different, right? And that's where Kris Heichel and Eric Haberstad from Fairway Independent Mortgage Corporation come in, and they are here today to be our presenters. And before we get into this, I just want to give you a brief background. And I apologize, I'm going to have to look away. I'm stealing this from something. I want to get it right. But Kris is a dedicated mortgage advisor who genuinely loves helping individuals and families achieve their dream of homeownership. In 2022, she served more home buyers in Minnesota than any other loan officer. It's a huge accomplishment, which was recognized by the Scotsman Guide. With over 20 years of experience, Kris and her amazing Southeast Minnesota-based team are experts at guiding clients through the ever-changing mortgage world with care and precision. Eric is the business development manager for the Heichel team. He's all about building high trust relationships, supporting the success of real estate partners, and creating lasting connections with their clients. Today, they're going to present a couple of fantastic programs that they've got that are, I believe, specific to Fairway Mortgage. And I don't know if you got approval for the third one, but we'll go with at least two, and then there might be a bonus one at the end. So without further ado, Kris and Eric, you guys have the floor.
Hey,
Thank you.
thanks, Bruce. So what a great honor. Thank you for allowing us to come on and just share a little bit. Like you said, so many people don't know about Fairway Mortgage, even though we are the second largest independent mortgage company in America. We do a huge amounts of purchase business. That's really what our focus is on, not necessarily refinances, although we do those as well. Our team specifically, we do everything in-house. We underwrite, we process, we fund, we do everything locally. Like it's not going to Texas, it's not going to any other place. We control the process from start to finish. And I think that's what makes us very, very, very unique. Um, we also have a CEO with our company that was a loan officer. So he gets how hard we have to work for every single deal that we get. And he knows how special relationships with realtors are, that you guys truly are our clients. And we have to service you to the best of our ability. We have to close on time. We have to give solid pre-approvals. And we have to come up with products that are going to help you build your business. That is our main focus with the Heichel team, is really coming alongside of you and helping you grow. So Eric is our biz dev person, and we just pulled together just a couple of our what we feel are unique product offerings, and they're really geared towards realtors. Eric, what do you want? What would you like to review the first one?
Yeah, I'll pop up. Our first one, Bruce, I think you might have to give me
Oh,
approval to share screen.
yep, there you go.
I'm just gonna pull up the ones that you guys can see our specialty programs.
Yep.
Yep. All right, we'll start with that. And I know cash guarantee was one of Chris's favorites, so we'll roll with the cash guarantee to start.
Yeah, so the cash guarantee program is exactly what it says it is. We take a borrower, we pre-approve them like we would normally. And when we pre-approve, we are talking order verification of employment, pulling credit, reviewing that credit report, scrubbing it, reviewing bank statements, looking for anything that may hang up the deal. But then we take it one step further. We give that pre-approval letter, we let them start shopping, but then we take them and we put them into underwriting. We fully underwrite the borrower with no conditions left other than finding a property. Once we've done that, we reach out to you, the buyer's agent, and we go over the cash guarantee. So what we are telling you is we guarantee this loan will close. If it doesn't close, we will pay the seller $10,000 or we will buy the property. This even is if our borrower quits their job. This is if our borrower goes out and buys a boat 2 days before closing and now they don't debt ratio. So we are guaranteeing that this loan will close. The one caveat is if an appraisal comes in low, we'll purchase it, we'll agree to purchase it for the lower of the purchase price or the appraised value, or we still give them 10K. So if the appraised value comes in low, there's no negotiating happening and the deal falls apart, that's okay. We're still going to pay the seller 10 grand to go ahead and put it back on the market. It is a true cash guarantee. Like that's the only caveat to it. If the seller refuses to maybe do some minimum property repairs that the appraiser called for, that does null and void the product. But you can compete with cash that way. There's no reason that a seller shouldn't accept it. So that is one of them. Lock, shop, and go means that we can lock the borrowers ahead of time. This market has been crazy. And if the borrower wants to lock in their interest rate and then go shopping, they can do that. Fairway Advantage is going to be more for those products that we can't give a cash guarantee. So maybe if they have to do a contingency when they're selling, we're still doing the Advantage. We're still putting them all the way through, but there's not a cash guarantee attached to that. So in that case, they'll just get a mortgage commitment letter versus the cash guarantee. And then the other product we have is a lock it and list it. So if you're more focused on listings, we can lock the interest rate ahead of time for a future buyer. So if we want to make a property more appealing, we can talk to the seller to do a rate buy down, whether it's a 2-1 buy down, a permanent buy down, or whatever. And then we can market it specifically that this property is being sold with a 4.99% interest rate. It's not a mortgage assumption. It is literally that they are locking up that interest rate for that specific property for a future buyer. And it can be FHA, VA, USDA, conventional, whatever. It doesn't matter. So that is something, again, in this volatile market that we have seen, and it works magic in getting those properties sold where maybe it has to be a quick sell. Maybe they have a contingent offer on another property and they got to get this sold. So those are a couple of the unique products that we have when it comes to getting a buyer into a home. If you've struggled, do that cash guarantee, or if you have a listing that has been sitting, let's do a lock it and list it. Couple things that we can offer.
Kris, how long is that lock it and list it? Is that like a 90-day lock?
It can go all the way up to 180-day lock.
Really?
Yep.
Wow.
180-day lock. And we also have, for like our construction programs, we have 360-day locks too. And I tell you what, 2 years ago when the rate started changing, I offered to lock somebody at 6.875 and they about croaked because the rates weren't even 6% yet. And I talked him into it. And when we closed, the going rate was 7.5. And he was like, my God, I mean, if I wouldn't have done this, we're talking like a $600,000 build, what it would have done to their payment. But thankfully they trusted me. And that's the unique thing about us too. And I think other lenders do it as well, but we really watch the market and we really rely heavily on market experts, and we do our homework every single day. And listen to the Barry Habibs of the world, or the Dave Stevens. Well, Dave Stevens dead, so we really don't listen to him anymore. Forgive that me, but other experts like that, that just bring us that knowledge. And our secondary market department also feeds us with as much ammunition as they possibly can. So we then can guide our borrowers, like, we think you should lock, we think you should wait. If we do lock, we have a free float down. So let's say we decide to lock, a borrower decides to lock, the market improves by a quarter, a half, whatever. It's no harm, no foul. We float their rate down. Doesn't cost them anything. So just different things like that we can do too. We are independently owned. We are not we're an ESOP, so we're employee owned. We have so much agility and flexibility in what we do because we don't have to answer to hedge funds.
That's amazing. So
Yeah.
of these three, like the Fair Advantage, the Lock, Shop and Go, and the Cash Guarantee, are there any, and I've tried to read through most of this to answer my question, but are there any fees to any of the buyers or sellers up front for any of this stuff?
Nope. The 360-day lock, there is a 1 point refundable fee.
Okay.
Just because we're locking so far in advance and we're hedging that money for so long.
Yep.
So it's not really a fee. We lock in that 1%. And if for some reason they're like, yeah, we're not going to do the loan with you, they lose that 1%. But if they close with us, it goes towards their closing costs or down payment or whatever they would need to use it for.
But that's just for the 360. That doesn't apply to the 180.
Right.
Okay.
Correct.
Okay.
Yep.
Wow.
Yep.
Okay. Cool. That's awesome.
Yeah.
That's amazing.
And with that, I'm just going to pull this over here and we'll come back. Our forward commitments kind of just veers right into that after you talked about the Fairway Advantage and Lock, Shop and Go. So this is going into if you have a partnership with a builder, and Kris will roll from there.
Yeah. So right now, and I know that you're not just in Rochester or Southeast Minnesota, but specifically for Rochester, we just had a national builder come into town, right, Lennar, where they're going to offer these crazy incentives to buyers. And this is how they do it. They hedge a pool of money and they build it into their sale price. We can do that same thing. So with what a forward commitment is a builder can lock in a $2 million pool of funds, and they can make that offer that we're going to offer you, again, that lower rate, that 4.99 interest rate, or we're going to pay 15,000 towards your closing costs, or whatever all those national lenders are doing. This is exactly how they're doing it. And so a forward commitment is nothing new. Forward commitment's been around for 30, 40 years. But we're dusting it off the shelf and bringing it, especially for realtors that are maybe looking to open their business to builders. I know that's kind of a hot topic right now. A few agents that I've been talking to, they're like, I really want to get into builder business. I really want to get in with a builder. I want to be their exclusive agent. Well, if that's something that you want to do, let us come alongside you and present this to your builder, or just it could just be a high level overview of what we can do for the builder so they can compete with these national builders. Or we can bring in our secondary market Einsteins, as I like to call them. They're brilliant, and go really deep and explain how we can market this and how we can help a builder sell more homes, alongside of you, or just compete with those big box builders.
And a lot of that too sometimes is when your realtors are grabbing new developments. We like to be if you become the exclusive realtor in a new development, that might be open up to multiple builders. This is a phenomenal tool for a realtor to bring into a new development that you are advertising, that you're doing to these builders, whether it's 1, 3, 5, whatever it is, to get this in. So that means when you're going in and you're putting that home on the market, you have a pre-advertised rate. And like this says here on the screen, it's usually advertised lower than what the current market rate is. So it's a great one to land those new developments if you are working on grabbing any kind of development.
So when you're real quick, and I don't want to lock you into anything, but when you're talking about advertising a lower rate, are you talking a quarter, a half, 3/4? I mean, what's the average spread on something like that, or is it all over the board?
At least a point.
It is. Okay.
It's at least a point. And it's being paid for by the builder, right? I mean, they're paying for it. They're getting it at a discount, if you will. But they can also include paying for closing costs in that. But as long as they know it ahead of time, ahead of doing the build, right? And they're going to price that house with that number in there. So, in their margins, it's a game changer. And we have to help builders, in my opinion, look at it a little bit differently on how they can compete with those big box builders, right? And we want to do that too. When they're offering 15 grand, I promise you the builder is not taking 15 grand off of their margins to do this when they're saying that they're offering that. They're pricing it in. So this is just something that I think if you're looking for another pillar of business to go after those builders and present this to them. I really doubt that many other realtors or agents are presenting it this way to help them build more than those 1, 2, or 3 homes a year,
And we know the Rochester market too. They're building. It's new builders are coming in, new developments are happening every single year. It's we are the reason people are going and agents are going towards that new business is their high dollar homes. The cost of construction. I don't know if anybody's seen it go down, but I haven't since I started in the financing industry. So to come in and be able to, offer that lower interest rate, it's definitely helping that payment for people to get into that home. And I firmly believe that back in the day when I was buying my first home, it was split level homes with unfinished basements, and we went away with that, right? Um, but you come in with depending on the development and where it's at and how it's being developed, there's options to come in with an entry level home and still have a program like this in some developments, which would get more people in homes and which would grow everybody's business.
Right. And you mentioned Rochester. The nice thing about this platform is we've got Lisa and Bob from the Twin Cities. So they have big reach out there with builders up there as well. We got
Yep.
Jen from Blooming Prairie. She handles all the western side of Minnesota. So yes, you do. And so we have a good amount of reach just on this Zoom call, not to mention the number of people that are going to watch it later. So I think this is a great program. And quite frankly, I know that Kelly has heard of it. I haven't heard of it. But it's something that we will definitely be talking to our builder about.
Right. And right now, hopefully y'all are doing annual planning. So maybe you're looking for another pillar of business. And so maybe you throw that builder, go after a builder in there and reach out to us and let us help you.
Awesome.
All right. These aren't all loan programs, but actually we'll go into the one that's being introduced. It is so close to Minnesota, so I'm going to put the caveat on that we got I think it's called Hopper, is how they're putting it. They are months away from introducing it to the state of Minnesota. We confirmed that last night. It is a phenomenal program that is only for the FHA program, and it will get more people in homes.
I can share my screen, Eric, if you want me to.
Absolutely.
So, like Eric was talking, this is a product that is newer to the market, anywhere, everywhere. It's a national product. It is, can you see my screen?
Yes.
Okay. So what this is it pairs with FHA. It is going to help more people get into homes than just bond loans or things like that, right? So of course we have the Minnesota housing stuff where you have to have a 650 FICO. You come in and it's only $1,000 out of your pocket. Well, this new product that is being rolled out, it has to do with solar panels. So don't turn off the volume now, but it is is what they're dubbing it, is a research-based product. They are going to offer the buyer of the home, if they put solar panels on their house, they are going to offer them a 3.5% grant of their purchase price. So really they're giving them their down payment. And then the buyer has to do the solar panels on their house. So the solar panels will be financed into their loan. The property doesn't have to appraise to cover it, but they've got great discounts on solar installation. The reason we like this is if people do have money saved, rather than using Minnesota Housing, they can use this product and keep their money in the savings and use this 3.5% for their down payment. The whole basis of this is the research that they're doing is we are going to see how this changes success of home ownership if we give them a grant for a down payment versus them taking their money out of their pocket. The reason I like this is it's a savings club is how we get to data enter it on the 1003 or on the application. So the system thinks it's their money that they saved. It's not looked at as a gift or a grant, which if it's a gift or a grant, it's another risk layer when we're running it through underwriting because it's not really their own money. So it might not fire an approval for us. Well, in this case, it appears as if it's their own money. So it's going to fire more approvals. And then obviously everybody knows that solar is a green saving, money saving if people do solar panels on their home. So what happens is if you've identified a property, you have a borrower, we send the address to this company, they review it, make sure that there's something that can have solar panels on it. Even if there's tree coverage and we need trees trimmed to do it, they will trim trees to be able to put the solar panels on and they'll roll that into the cost of the solar installation. So it's brand new. Like we haven't even had an opportunity to use the product yet, but we are so excited about it because I really feel that this is going to put more people into homes that otherwise would not have been able to get into homes. And then it talks here about the other, how it sustains homeownership. Again, there's this tax credit that they'll get. They're saying increased value, property values. I don't know if that's the case or not with the solar panels. I mean, maybe if you're in Arizona, but remember that this is not a rented system. So the solar panel that they will put on this house is an owned system. I know a rental solar system is not, does not increase property value. But if it is an owned system, it does.
So what they say under the FHA guidelines, which was our number one big question on our first review of this program, is, Kris mentioned a little bit earlier on if the house appraises at $200,000 and we can estimate that a solar system is going to cost $50,000. And that's probably on the high side, right? Under FHA guidelines, it's already in there that says that the house does not have to come at 250,000. FHA program really wants solars. I didn't know that until this year, but it's in there that it will be fine. They claim that under FHA guidelines and the rules that they have within FHA that it will increase the value of your home at the price of what the system is putting on the house.
Yeah, they said this is a solar system average is going to be about 20 to 30,000 is what they estimate it to be. But here's the deal, you guys. If you have buyers that have been turned down, maybe they have a 580 credit score or they have no money or whatever, this is a way to get them into homes. This, it's a product that will do for that. I mean, I would even offer to put somebody with a 670 in this product because it's free money. The 3.5% that they're getting down is forgiven instantly. They write, I don't know. To me, it's a no-brainer. But I really
is there a time frame of when they have to have the solar panels installed?
Well, weather dependent, right? But they want the solar installations to start 30 days post-closing.
I'm sorry, 30 days before closing?
Post-closing, after closing.
Post-closing.
Yep.
And then can they pick who they want to do it?
No.
It's a set
It's a vetted
vendor that,
it's
okay.
a vetted solar company that this Hopper program has.
Okay.
And the reason that is too is because they do it at discounted. They'll put the solar
Okay.
panels in at a discounted rate. But they vetted these solar people.
And they will be approved vendors in the state of Minnesota.
Yeah.
Hello,
And
by the way.
national product as well. So everything that we're telling you right now also is a national product. This isn't just exclusive to Minnesota or wherever. It can be an Arizona property. It can be a Florida property if you are licensed there, if you're referring to another licensed loan officer there.
But they are limiting the companies they are working with during this time frame. So not every company will have it.
So
And
the,
here's a different question too. Can the solar panels be like on a post in the yard, or do they have to be on the house?
I believe they have to be on the house, Jennifer, but I don't
Okay.
for sure. I'll find out.
I just had a buyer, we talked about this, and they don't want to put it on their roof because they have a metal roof, but they want to put it in the yard.
Right.
So,
I'm assuming. I mean, I don't know why you wouldn't be able to. It's the same benefit.
interesting.
okay. Okay, cool.
Yeah.
That's a
So-
neat product.
So the addition of let's call it $20,000 to $30,000 of the cost of the solar panels being rolled into the mortgage. You're basically saying that's not going to affect their debt to equity ratio.
Right.
And,
Correct.
and the only caveat I'm going to assume is whether the buyer can then afford the monthly payment. I mean,
Right.
it's going to change, but they're still going to have that 3%, 3.5% in their pocket, right?
Correct.
Yeah.
Correct. Yep. They would have to qualify for the mortgage amount being higher. But it's just like with Minnesota housing, we have so many amazing down payment assistance programs. I mean, we all day long are putting people in down payment assistance with $37,500 in assistant loans, right? Well, it's not that they have to qualify because those are 0% interest, no monthly payments. But eventually when they sell that property, they're going to have to pay that $37,500. So this is how we also counsel people too. Like, look, you're borrowing 105%, 110%, or whatever it is of the value of the property. So this is kind of a different direction, Bruce, than what you were talking about. But nonetheless, you're going to have to live in this house for 3 to 5 years. Or you're just postponing bringing in your down payment, really, is what we tell people. So obviously we don't want to put people into this product if their intent is to live there for 1 or 2 years, because likely, although they say that solar is going to increase the value, I don't know that it would increase at $30,000. If you're looking at here in Southeast Minnesota, you can buy a house for 150 grand, right? 150 grand, you're going to put a $20,000 to $30,000 solar product on it. They're probably going to have to live there for a couple of years before they have positive equity on it.
Right.
Yeah.
Right. Okay.
But it's just counseling borrowers.
Yep.
You know what I mean? Just making sure that they're getting into a product that they're going to be successful in.
But again, it's the whole point of why you guys are here. I mean, you guys offer different programs for different buyers in different situations, just like Jen has, right?
We do.
And if you have this program and it works for Jen's buyer, awesome. It probably it sounds like a definite benefit for them, where it doesn't, I've never heard of this, and I don't know if anybody else has it, but it's an amazing tool in your toolkit.
Right. So here's what I say. I don't mind being a turn down lender. I don't mind being the lender, the second called lender when a file goes sideways. I wish I had more people call me when they get a denial, or 5 days before closing, they get told they can't do it. God, I wish people would just listen that all lenders are not created equal. We have so few overlays. I don't know of a company that has fewer overlays. We honestly have a list of our overlays, and what an overlay is, if you don't know. So Fannie, Freddie, FHA, VA, USDA, they all have guidelines, right? This is the minimum guidelines that we require on any given topic. Well, what lenders and banks especially do, and I'm not putting down other companies, please don't take it that way, but what they do is they say, yeah, that's FHA's guideline, but we're going to go even tighter. So FHA doesn't require septic and well tests. Their guideline, they don't require that. So if there's a failing septic system, but the toilet's still flush, and an appraiser doesn't call out like, hey, I think something's funky with the septic system, we don't care. Now we know the counties do, and it has to be addressed with the county, but we don't care. Let's see, USDA only requires septic. They don't require well, but so many lenders do an overlay. So many lenders have an overlay of FHA, you have to have a 600 or a 620 FICO. You know, we like 580, but we'll even go lower than a 580 if there's compensating factors, if it makes sense. We do things that make sense. We don't care if it's got 50 acres on the property. We don't care. That's not a conventional guideline or a Fannie or a FHA guideline. All of these things that you're being told that is a Fannie guideline or a Freddie guideline, I hear it so many times. It's not. It is the lender's overlay on top of that product. So, I mean, VA loans, we can go to, is kind of crazy. And of course, please know when I'm saying this, our intent is to set the borrower up for success. We don't want to put a person in a home for a paycheck. That's not our goal. But if we have a VA loan, you have to be married to the other person you cannot be unmarried and have a co-borrower on your VA loan. So we've done loans where the veteran has a 70% debt ratio. It's approved. They can't put their girlfriend, boyfriend, whatever on there because they're not married. Well, we'll do a 70% debt ratio all day long, knowing that they've got somebody else that's going to be paying the bills in the house. But they just can't go on the loan because they're not married. So there's very few things that we cannot do, even property wise. If the property is a dump and it can't pass appraisal inspection, we'll do a renovation loan on it. You know, we're not afraid of rolling up our sleeves, digging in and doing the hard stuff. We do credit repair all day long, right? If somebody comes in with a 515 credit score and we cannot get them approved, we're going to take them through the steps and we're going to tell them exactly how long it's going to take, what they need to do. Sometimes it's a matter of do this, get us the documentation, we'll rescore you, you'll have a 620 in 48 hours. I mean, there's just things that we don't, if somebody deserves a home and wants a home and financially looks like they should be able to do this home, except for this one thing, we're going to leave no stone unturned to get them into that property.
That's why I love working with you guys.
Yeah, I mean, and listen, don't get me wrong. We love the 800 FICO, 20% down, been on their job for 50 years. Don't get me wrong. We like those things too, but we like the hard stuff. It's the most gratifying borrower that you could ever work with, you know? And I tell you what, if you want loyal clients, you work with those people that never thought that they could buy a house or have been told no so many times, and they become raving fans, not just of the lender, but of their realtor too, because it was you guys that sent them to that lender that's going to roll up their sleeves and say, let's go, you know? And we know that when we do a pre-approval, it's not lost on us that you're putting us in charge of your paycheck. It is not lost on us at all. We completely understand the responsibility that we have been given with any client that you refer to us. We do know that. I mean, when we do pre-approvals, they don't fall apart. I mean, for the most part, nothing that we could typically control. I mean, do deals fall apart? Unfortunately, yeah, they do, with just some things that you can't control. But when we do a pre-approval, we don't just take the application and have the borrower tell us what they have in their bank account and what their paychecks say. We will never, ever do a pre-approval that way. We we do judgment searches. If there's a judgment that pops up, in most cases, we have a title company that we go to that is not required to do a buyer's judgment search, if we know that ahead of time. And so when we pre-approve, we run borrowers through judgment searches. Just any lesson that we learn, any mistake that is made or something that we missed, we add it to our checklist. So our pre-approvals, as we go on, I've been doing this for over 20 years. Our pre-approvals just get stronger and stronger and stronger because of things that were missed or mistakes that were made. So.
And I'm just going to make a statement that you all just witnessed why we call her Queen Scrappy here at Fairway Mortgage. That is her nickname, because the minute she's on fire, she's rolling, and it's like a freight train coming through. That's why we all joined her team and role. And I'm only doing this, Kris, right now because I think you need a minute to breathe. Um, because she will go, and she's not lying. She puts the pedal to the metal.
Yeah. And we have a direct dial to our CEO. I could pick up the phone right now and call him and just be like, hey, I just got to talk this through. I disagree with this.
This is Jennifer.
Or I can call our underwriting managers. And we've just got such great rapport with, anybody in our executive team. We've got their respect and they want this stuff almost as bad as we do. So,
Kris, can you stop sharing your screen for a second, please?
for sure. Lisa and Bob, have you ever worked with a Fairway Mortgage?
I have not.
Okay.
I really, really appreciate your thoroughness. Your passion is extremely infectious, and just your dedication. I had never heard of you, so I'm very happy that I joined this call.
I love what I do.
Thank you.
Thank you.
I'm just pulling up this screen right here because, and Lisa, thanks for leading me into this screen here. These are Fairway's core values, and you guys hear a lot of things, whether they live them, do them, say them, advertise them. The last couple of years, I want to say that even Fairway kind of got in the funk of just pushing and going because the market changed and everything. And our CEO, Kris, and everyone, our number one core value is humility first. And there's a lot of truth to that within this company. You'll see these, I may take number 3 to the max, and that's having fun, but we
Eric,
do
I
that.
don't know that I don't know that we can see the right screen. We see the realtor guide right now.
You see the Realty guide? Oh,
Yep.
not sure why that's not coming up. Did it come up yet there?
No.
Weird.
Is it in the realtor guide? If it is, you might have to just scroll down.
I might, yeah.
So Kris, how long have you and I been working together? The whole time that I've been in real estate, you've been at my disposal with a different company. And now that she's been with Fairway, it's been a game changer for all of the deals that we've done together. And I don't think I can't think of any one that fell apart for anything that you guys did.
Right.
We've had talk about judgments
Right.
or
And we
liens.
had a bad one. Yeah.
Yeah.
But the part of that too, Jen, is that if it's an amazing referral partner that we have, and just it's going to impact something so horrible if we don't close this loan, we will fund the loan and close the loan. We've had to do it in my career at Fairway 2 times, and honestly, both of them were on condos. Because we couldn't get the condo approved, and we tried every way but sideways, and went to my CEO and I'm like, this is such a good referral partner and I have to close this deal. This borrower will be homeless. We'll close it. Or it hasn't happened to us, but other branches, let's say that it got down to the wire and they can't close the deal. We'll pay for rent for a borrower for 6 months. If it's something that we did that we messed up on, we're going to own that stuff. So I've never worked for a company like Fairway, you guys. I mean, is it perfect? Is it perfect? No. Oh yeah. And we now service our own loans, which is nuts. We are so excited. So servicing with independent mortgage companies, servicing is a big, huge chunk of change that you can get, because selling servicing rights is huge money. But our executive team listened to us loan officers say, please want to keep our servicing, right? We want to be able to help that client 2 years down the road when their escrow account's messed up or whatever, or they get back solicited from a servicer that they're with now. We don't want that to happen anymore. So starting last month, any lender, any loan officer or branch manager that was diamond or gold or had a status, we get to now keep the servicing for all of our loans. There's certain portfolio products that we won't, but all of our general loans, conventional, FHA, USDA, anyways, all of the general products, we get to keep that servicing now, which is crazy. It's huge. So,
That means they will be calling Fairway
yeah,
and not being bounced around to.
somebody in India or whatever, I mean,
Yep.
so,
Nice.
yeah.
I gotta run, you guys. I just wanted to pop on
Thanks,
and tell
Jen.
anybody who is listening how awesome you guys are. So
Thank you. Appreciate you.
Thanks,
love
Jen.
you all.
I don't know what you
Jerry.
did to your arm now, but that's a story for another time, I guess.
I had rotator cuff surgery.
Oh, for God's sakes,
So
Jen. You're the
I know,
bionic.
I know. I'm an overachiever. So
Yeah, you are.
all right, you guys. Love
All right.
y'all. Bye.
Love
See
you.
ya.
Bye.
Eric,
I
we
know
can see the core values right now, so
You can?
yeah.
Perfect. I'm sure you all read them as they were there, but I mean, these are just huge things for us, and they're reminded a lot of our corporate events. And I just, wanted to put that because Kris was just rolling, and number 4 was one of them. Created an amazing experience. Um, not scared to foster growth and acknowledge, seek wise counsel. Those are all things that she was saying there that I just really wanted to point out. You probably heard it in many of the things that she was going on about. So just thought it was something I just wanted to add to it. And also, a little sidetrack. If you all want to know, Jennifer Walsh trained me at my first job as a bank teller.
Wow.
Uh, so that little off script there.
Uh,
Um,
I didn't even know that. I did not know that. That's
yes.
funny.
small
All
world.
right. I'm going to go back up and I'm going to pull up our realtor guide. This is another thing that we do as a branch to help and assist realtors grow their business. We always do feel that realtors will have an edge on getting a deal done if they have a knowledge of products. We're not asking you to be experts. That's our job, right? You guys go get those homes sold, be experts in the market, be experts on the homes that you're showing and whatnot. But if you know and have that good conversation that you're developing with your person, you might have an idea of what product they're going to fit in, how they should go. And, I think the relationship always starts really good and, stays solid when, oh, I think this can be done, or I think this, and then they go meet 3 lenders and they're like, why is my realtor telling me that they believe this can get done? And really, there's no opportunity for it ever to be done. So to have a knowledge or have the stuff in front of you is super important, just to have a basic idea of products that are out there. So we put our realtor guide together that we give to our agents, either just to kind of have in their briefcase or um, in their offices, whatever is best for them. That goes through loan products. It has, I'll get to down some of those, but it has all that in there. We also offer um, marketing help. We have a full-time marketing person on staff. So if you needs things co-marketed, we put on classes. If you have 2-1 buy down has been big for the last couple of years. We can help put those flyers together with some options in there for the 2-1 buy down. So me and Bree Mashing on our team will definitely put those homes in that thing. So if you want a specific home with those images, we can roll with that. Things that Fairway Nash, our full company does. We put on training events for realtors.
We do 2 Zooms a month that are agent facing. The one coming up is the importance of one-to-one video. And it really goes through. It tells you why, it tells you the why, and it tells you the how. It gets really detailed and specific. So we can also, if you want, just drop it in the chat and we can add you to that list that we email out. I know Kelly was gracious enough and shared one that we did last week, the why. But we have another one coming up. I think it's December 19th, and it is the importance of one-to-one video.
Other things that we're part of is the American Warrior Initiative. Kris, if you want to talk about what Fairway did with the dogs and
Yeah. So AWI is a veteran facing program. So far, year to date, let's see, AWI has been around for, I think, 9 years, maybe 10. We created it. It's our nonprofit. And so far, we have put almost 400 service dogs in the lives of veterans and heroes, and literally have saved lives. So it's something that is 100% nonprofit. Any money that we give as employees truly goes all into the veteran to be able to put these. So if you have someone that you know that really has a desperate need for a service dog, please let us know, and we will do everything in our power to share their story with AWI and try to get a service dog in their hands.
Also, Fairway Cares, you want to roll into that one?
Fairway Cares, this was developed, is our CEO's sister that started this, and this is for anybody that has suffered a loss or serious illness. We have paid for funerals in our area for some really tragic. Baby died of SIDS. It was a single mom. She didn't have money. We gave $5,000 to give that baby a proper burial. We had another one that a young kid was defending his mom's life against her boyfriend, and the boyfriend stabbed him and he died. And again, it was a single mom kind of situation. We had another person that just closed on their house, broke their leg and their back in a motocross incident. We paid for 3 months of their house payments. So we just do things like that for our clients and our agent partners if there's a need. And then we do small things. Maybe somebody that was diagnosed with breast cancer, you have a client, or we have a client, or a realtor or whatever that was diagnosed with breast cancer. We're going to give them a really specially prepared, really individualized box that also changes lives. So just another part of the heart of Fairway.
Yeah, and I know these are not loan products, but we are more than loans is one of the things that we say. So I know one of our previous meetings we chatted about the season of giving, advertising, getting out there, be active. These are things that are near and dear to all of our employees' hearts here. So we are kind of veering off a little bit of loan products and letting you guys know that we are more than loans. But here's, that book that I was talking about earlier before I got through the initial ones here is just our loan programs, just quick one-pagers on what's out there so you guys have them in your books. Our VA loans, jumbo loans, conventional loans, FHA loans. It's all here. We promise we're going to bring you another one later this year, 2025, if Bruce and Kelly allow us to come back on. And we are going to
Absolutely.
talk about HECMs, aka reverse mortgages. That is one that can be all done by itself. We do have investment programs. People that don't have credit, we have the ability to get loans done with people that don't have credit. They have cell phones, utility bills, other sources of, financial responsibility.
Credit history, yeah.
Credit history. We have unique properties situations, bank statement loans if you're a self-employed borrower. All this stuff is in this one that we like to assist and help, and stuff that's at your guys' fingertips.
Hey,
We could
Eric,
probably
real
get
quick,
this uploaded for you.
Eric, real quick, I see that Lisa has a question. She's got her hand up.
Oh, yeah.
Hi guys, I am a specialist for Homes for Heroes. Are you affiliated or aligned with them?
So I used to be, and actually I was the #1 person in Minnesota. And I would entertain it again. And it is not Homes for Heroes' fault. It's my fault that I just really didn't market it. So what was happening is we're doing loans for people and I'm just giving them their credit, right? I'm not getting them because they're a hero. So it ended up being super expensive for me. But again, that's my own fault because I didn't really market for it and get people in my door because they were heard of me from Homes for Heroes. So Lisa, I would absolutely entertain a phone call and
Yeah, let's get offline and just
yeah.
talk
Yep.
about if it might be something that makes sense.
Absolutely.
Absolutely. Yeah.
Yep. Happy to do so.
Thank you. The other thing is, in this book is when inspections are needed. We went through a whole market that I don't know if anybody saw an inspection on a home for a long time. And they're back, but doesn't mean they're required. So, just when they're needed, when you'll see them in your loans, and it'll help answer a lot of the questions of why are we doing this? We dig down into closing costs, down payment. Everybody puts their loan estimate, they create them a little different. And I think it's really good to know how those look and why some look different. Some people take out or add in, depending their escrow stuff. So maybe it looks like you're coming to closing with less cash or you're coming with more cash. Good to know why and how those and we do explain those to our buyers, but when you guys are talking about it, they trust you guys. You guys are their partner. You're showing them the homes. You're driving in cars with them. You're meeting them at the house, probably dinner, lunch. So it's, and we will as well. Um, but good for both of us to know. Do's and don'ts, both as new agents, sometimes seasoned agents, and even loan officers. Just general information on when can you buy again. Just because you have a foreclosure or a bankruptcy does not mean you can't buy again. And what are those time frames? So a lot of information in this book, acronyms, everything. As much as this is at your fingertips, we're also available by phone to be able to help people out at any time. We like to say we're a 24-hour lender. And if we're awake, we are.
So speaking of the phones and and contact information, Eric and Kris, can you guys throw your contact information in the chat? I know that Lisa and Kris were talking about getting offline to do a phone call.
Here's
So
what I'm going to do. I'm going to put our mainline number in there, and that will ring after hours or whatever to me. So that's the first one's going to be our main number. This is my direct number. This is, and you can text, call, whatever, any of these numbers. We have a team set up so that there's someone on call every single day of the week. Sometimes on Sundays, we like to shut her off at 7 if it's a teammate that is on call for that weekend, but I'll answer my phone or text at any point in time. And same, I'm going to give you the team email. This is what we all use because somebody is always watching it. And whoever it's addressed to, it will go into my inbox. So.
thanks, guys.
Yep. That means it's just the ability to who's ever on call or whatnot has access to that. So it's great. It's been working well for us.
Yeah, it really has. I was scared to death to go away from giving out my individual email or whatever. Or just giving the main number or whatever. I was like, I don't like that. I'm giving up but it's been a game changer for us. We can just help so much more quickly. And I trust my team wholly. Like I have people working for me that, in certain things, they do it way better than I ever could do it. So it's awesome.
That's awesome.
Yeah.
Does anybody, I know we got about 5 or 6 minutes left. Does anybody have questions for Kris or Eric on any of the stuff that they presented?
Yeah, hey Kris and Eric, it's Bob here. Sorry, I was actually kind of hammering away on some work when you guys were talking, but listening the best I could. I have a Fairway mortgage person we've worked with quite a bit up in this particular area. I don't know if you know Darren Heller or not.
For sure.
But do you guys have a local rep up here as well or not? Are you guys basically all in Rochester area?
So we have offices in Austin and Rochester right now. That's where our office is. But I mean, anymore, you can do things so remotely that it doesn't even matter. I mean, look at COVID taught us that you don't have to meet with clients.
Yeah.
We do Zoom. I'll do Zoom, like go over all their numbers and whatnot over Zoom. We cruise through. I share their loan estimate or whatever. So no, Darren is a great guy though. I will tell you, he's a Spitfire as well.
But with that being said, we are looking to grow. So if you have anybody looking for a spot.
Yeah. Like seriously, if you know a lender and you're like, God, they're so good, but the company they're with just has such limitations. We're always looking to hire hardworking, dive in, get the job done, never say die kind of people. They're hard to come by. I will tell you that. Really hard to come by. So we don't hire to hire. But if there's some individual that you think would fit really well, and just needs to be aligned with a different team, we'd be happy to have a conversation with them. But
good.
Yeah.
Right.
Absolutely.
Perfect. Anything else from Kris and Eric while we're wrapping up here?
Well, really cool programs. I'm definitely gonna go back through the call and look back at those again. A lot of information, but really appreciate you guys putting together a well-designed presentation for us today.
Thank you.
Appreciate
And we
that.
can also, if you want, just email us your address and we can drop one of those realtor handbooks in the mail to you too, just so you can kind of peek through it. And I know that you'll find something in there that will help you. And again, like Bruce said, you probably already have your favorite lender or somebody that you work with consistently, and we're not looking to replace them. I mean, unless you don't have someone, we would love to be that person, but we are here and we are not insulted by asking us to take a look at a turn down. We love it. Like I said, I love doing that the very most. I don't know if it's because I'm competitive or it's just the fact that helping someone that they've been told no and they're so down in the dumps and they think it could never happen. And we can come in and be like, we got you. We'll look at it in 5 minutes and say, absolutely 100% we can do this. Or, I don't know, it is questionable. We'll put it together as best we can and get the scenario in and get you an answer in 24 hours. Again, happy to do that as well.
All right, I just put my information in the chat for you guys.
Perfect.
Awesome.
Thank you so much, you guys. This was
Thank you.
really, I had no idea you had so many programs.
Oh, thank you. I'm so glad you jumped on. I'm so glad. We never want to be a waste of time for anybody. And that's always the thing you worry about the most, right? Like, what are we going to give a value that, so thank you for saying that.
And for those people that are going to watch this recording after this is done, I open up my chat. So you have all of Kris's and all of Eric's contact information in the chat that you can see for the recording. So please feel free to use those and reach out to them with any questions or conversations that you want to have with them. If there's nothing else, I really appreciate Kris and Eric coming on today and sharing all of their information. This has been an awesome Zoom meeting. I know a lot of people will get a lot of value out of that. We really appreciate it. We hope everybody has an awesome day, and thanks for joining us.
Thank you.
Thank you for the opportunity. Appreciate it so much.
Absolutely.
Have a great day. Happy holidays.
Thank you.
You too.
Guys.
Happy holidays. Bye-bye.